The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more do we go into the breach, dear friends. And as always, we meet at this time.
The following takes place between 2 p.m. and 3 p.m.
They're quick on the uptake, at least today. Of course, we're up just a couple of points, 3 points on the S&P. Cash volume is very light. We're running about 400 million shares less than we did at this time yesterday, which is kind of interesting. Probably a good sign that we are waiting for jobs numbers in the morning. And then, of course, we're going to be waiting for the Brit exit vote and the FOMC. And why I was never in the Army, I always heard the motto was hurry up and wait. And I think that is the mode out here. Not a lot of upside to this market. Not a lot of shorts, at least the last couple of days. So if there is something higher out here, there's not a lot of people shorting this, which also means that if we do have a surprise, probably have a deeper downside than an upside, at least from the short perspective, i.e. how many natural buyers if we go higher and how many people are natural buyers if we go lower. But it's been kind of quiet. Not a lot of people hopping on that short bandwagon, at least the last few days. And, of course, it's been lighter volume. Today is extremely light volume and pretty typical for going into summer trading. But you would have wanted to see this market probably go lower on this lighter volume into the job numbers in the morning. Instead of go higher with no juice. And, of course, a great deal of stocks we'll get into later that are still kind of banging at the highs with lighter volume and some banging at the lows, but refusing to bounce. I've got a few plays in the daily newsletter that are set up for tomorrow morning. We'll see how those turn out, but most of those most of all of those are low risk trades going in to the jobs numbers tomorrow. And, of course, a lot of things going into this month. We shall see how they pan out. In the meantime, we got to get this party started.
That it's all just a little bit of history repeating.
And what else we got going out here in 1997? Under orders from the U.S. Department of Justice and Securities Exchange Commission, the NASDAQ reduces the minimum tick size or trading increment from an eighth to a 16th on all stocks with a bid price of $10 or more. Of course, we had a lot of people that were running around. They were known as SOES bandits that were taking off that eighth for a while, a little less when it went to the 16th. It wasn't always a bid on these stocks on a 16th price. A lot of times it was still the eighth. But at least it was an option. By, of course, the early 2000s, we'd gone from what they called the teenies, 6/10ths and 8/10ths, or not 8/10ths, an eighth or 16th, but they called them teenies, to pennies. And that made brokers and others try to find different ways to fleece a unknowing public. We'll get into that with one of the news stories today. But brokers have always looked at us traders as a form of income beyond the money that we spend for our trade execution. And we'll talk about that yet today. But we shall persevere, move on, and conquer. Up 2.5 points on the S&P cash. Volume is tepid. too weak. Star Wars, a lot of news. If you're a Disney trader, didn't actually get a lot of chance to look and see how Disney was trading today. Let's take just a quick look. Kind of flat, was lower this morning with the market, kind of flat out here today. But if you pay attention to some of the trade journals, I still do. I read Variety for a number of years because, of course, that was part of the business. Still look through it. But what do we know? Some of the franchise around Star Wars, I'm calling it Star Wars and all, is being ordered to have a reshoot for this Christmas. This is not the big main line, but one of the ideas behind Disney's buying of Star Wars was that they would, of course, get all these offshoots out here. But they have shown this to at least some test audience, and it is pretty horrific from what we find out in Hollywood. They are ordering at least 4 to somewhat 8 weeks of reshooting to try to salvage this dog with fleas. But if we're watching Disney as we come into this winter, I have a feeling this normally movies don't get a lot better. They may get acceptable, but a lot of the cash that a lot of people were thinking was to be made on Star Wars may not be made and directly affect Disney. I never thought that the movie last year was all that great. I thought it was acceptable. It came nowhere close to the 3 first movies. There are a number of reasons why, but it was okay. But short of the girl, including the actors from the first movie, I don't think anybody really showed us anything other than a bunch of special effects. Of course, I was in that special effects business, and I kind of knew that we were letting the genie out of the bottle, and that was that they could basically ignore script, action, and good movie and script telling for special effects. You've got to just look at the winning record of somebody like Pixar, who understood from day one. If you ever watched their short movie on YouTube, it's called Luxor Jr. It is a animated film, but it lasts, about 5 minutes or something. But Mr. Lasseter from Pixar has, from day one, decided that he was going to put the script first, and it's made all the difference. I wish that the people behind Star Wars would do that. Anyway, reshoot, watch for this fall, but you may actually start seeing some of the numbers from Disney taken down quietly in the near future, as this line was supposed to generate $100 million come at Christmas time. Will it still do well because they put Star Wars on it? It might, but I think they're going to be working poorly in the future and demeaning the brand if they put this stuff out. But, it's already leaked. What else can you say about it? Anyway, Star Wars. Ugh. Be back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we've got a little action in the C-suite at SSYS. These 3D printing companies, of course, have been down fairly heavy. A little bit anticipated, especially by the stock prices, the CEO leaving and some other people coming on. Of course, mounting pressure. It's nothing really new, but since the last earnings call, basically wanting the CEO to leave from SSYS, 3D Systems, or not 3D Systems, Stratasys. Anyway, he will be out of their exit stage left on June 30th. But generally, you want to figure out that the next reporting period will have everything, including the kitchen sink thrown in, all the bad from the previous CEO, all the stuff that he hid, all the stuff pushed under the bed so no one would see it, comes out. And one of the things you should be thinking about, but normally I put at least the first reporting period on a hold and a no buy until then, because normally the new CEO does want to air all the dirty laundry of the previous CEO. Once you get all that out, you actually kind of have an idea what you might be buying in this thing, but probably look for continued weakness in the 3D printer sector throughout the rest of the summer. Box came out with earnings last night. It's off about 10%. It posted first quarter earnings after the bell. Despite beating analysts' expectation on revenues and earnings, the stock dropped 13% after hours, 10% right now. Investors were disappointed with billing numbers. This goes back to how much can fiddle with the books. And I'm trying to remember, maybe I'll look it up during the break, but the quote is by some famous dude who always said that the numbers and accounting of all of public companies and charters have either been gently roasted or completely burnt to ashes. And in this case, that is what investors are worried about, that maybe they are highly optimistic at what they're doing with the books. Occasionally, the numbers do not add up, and a lot of people will shoot first and ask questions later if there's even an inkling that there's some funny business going on. And of course, this is one of those IPOs that probably came out ahead and above what you would normally think of a value, i.e., it came out way too expensive for what it was. It's been in a downtrend since it's come out. And of course, the nice little drop lower out here today. But you're through it. You're in with volume. You did have a high volume spike into the March 10th high, but that reversed that day and put an end to that. You know, next big major low is February 9th low at $8.96, 1.2 million shares. I think a lot of people, as we've talked about it before, there's that $10 line in the sand where most fund managers are not allowed to own stocks if they stay under that $10 level for a while. It is not beyond the scope of reason to see some highly optimistic accounting practices from some of these companies. And as soon as someone hears that, it's even worse than being under $10 for a few days. It becomes a pariah and something that everybody wants to dump. And at least they are, why not cynical? They are like me. They are skeptical when they see these kinds of numbers. So another one, do not touch. We do not think, in fact, what is this? Let's change that because it has nothing to do with Box. We talk a great deal in the den about the big guys never getting fined. What we do have today is E-Trade, one of the bigger brokers out here, getting fined a little less than $1 million, failing to conduct adequate reviews of quality of execution in its customers' orders for supervisory deficiency concerning the protection of customers' order information. Do you ever wonder that if lawyers are actually paid by how many long words they can shove into one single paragraph, where they could have made this very simple? What's going on here? Well, maybe E-Trade wasn't doing everything it could, or actually it was probably doing everything it could to make sure that it made the most amount of money on its customers' trades. $1 million is fairly small. They neither admitted nor denied the charges, but consented to the entry of FINRA's findings, he said. But it continues on. From the day I started trading full-time to this day, I've not yet seen a broker-dealer who did not think that our money that they had in their account was their money, and it was their job to liberate some, if not all, if they could, even if it was a little bit. And, of course, some of these schemes that are in here tend to be like Superman. Who was the comedian? I'm trying to remember. I'll think about it. He was a Superman, though, in as one of the fiends, and he figured out that he could take 1/10 of a cent from everybody and have a ton of cash. And that was kind of that's where most of these schemes now lie, is that they can get maybe a nickel out of the entire trade, maybe a dime out of the entire trade. And, well, there is very few, if anybody, that are clean on Wall Street, but at least you're going to give them at least a parking ticket on this one. It is a mad market, but we will get into it as quickly as we can. Give me a call at 877-927-6648. It's been a while. I look forward to your dulcet tones over the phone. So give me that. Of course, as always, we appreciate your listenership. And we ask that if you like listening to the Power Trading Hour, that you tell two friends. And of course, if you tell two friends,
And he tells two friends.
And she tells two friends.
And so on, and so on, and so on.
well, then I'll have a lot of listeners. So please tell a friend, tell an enemy, tell a frenemy, both a enemy and a friend, about this, and we will get along as quickly as we can with it. We still have stocks that are pushing highs. Agilent is one of this. It's going into its big gap here at 46. Of course, not a great deal of energy into any of these. Let's see, this AKAO. Let's see what we have up here. Get into some of these here. I don't have them in list. Oh, I'm out of time. Email me at path@tfnn.com. Give me a call at 877-927-6648. Post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I got mail. Yay! I got mail. Yay!
I got mail, and it's Jeff in Kissimmee. He says that it's Richard Pryor in the Superman movie, and I'm pretty sure that is correct. He also wanted me to take a look at MGM. I'm going to have to look at that. I guess, is that the symbol, MGM? You would think that that would be it. take a quick look. It is, man, you're pretty close. The question is whether or not you would short this. You've got a little more volume yesterday. You want to see how the volume comes in today. But I would wait until you test this November 4th high, 24.41. You're what, 38 cents away? You know, this thing tests it, closes back below, you'll have a valid sell signal in MGM. So I can't see that. You certainly have to like the lack of energy the last 2 or 3 trading weeks out here. You had one day out here that had volume, and that's about it. So it doesn't look bad. A lot of these stocks, to me, certainly look like they're in bigger trading ranges. I do not like shorting stocks below 30 bucks. So this would not be my particular cup of tea, but interesting nonetheless. AKAO, Ecogen is a company that makes specific antibody type drugs. This thing really ran to 606. I think that's actually correct. I think they had some shorts in the stock, and they took it all the way up. The reality, though, is this came back down to about 380 where it is now, but a huge sign of strength. Now, this is a company that doesn't have a great deal of volume most of the time, but that may change in the near future. I would not be playing it now, but certainly look into it as it goes forward. What else do we have? Let's go back to some of the other ones out here that I wanted to look at. Joey Global is in my list. This is up fairly strongly, a nice gap up with some volume. And I think maybe there might be just a little bit happening out here. What you would have liked to seen is the volume probably come into this with maybe 15 million shares today. You had this huge volume down day on May 9th with a little over 10 million shares. You got 7.5 million shares now. You would have liked to seen kind of something similar, probably going to $20.75 where this gap down occurred on the 3rd of May. But we'll see what the news is on this real quick. It's an earnings beat and an earnings surprise, actually. Let's see what it is. 9 cents per share, topping analyst expectation for break-even earnings per share. Revenue for the period was $602 million, below Wall Street's estimates of $607 million. So light on revs, but not as bad as a lot of people thought. And if I remember right, 45 or 60 days ago, the company itself was talking down its earnings. So I don't know if you can fault the analysts that much if they had lower earnings coming at them. Other big stocks of interest, PPHM, is that it? Yeah, Paragon Pharmaceuticals up about 18%. A lot of these things, what I do notice is that these stocks sold off. One of the reasons why I think you had kind of a pop and a big sell-off in some of these pharmas today was that they were pushing and very hard trying to get some biotech IPOs out the door. There was one, I forget which one it was. It's too thin to even worry about. They raised either $100 million or less than $100 million, which is chicken scratch for the stock market itself. So not a big indicator that anything has changed, but a lot of people on the street are more than willing to goose the market to make them think that there is a market out there. I don't see how, we looked at Box earlier in the show. These IPOs still tend to be very weak as far as earnings potential in the near term, and make me think that there is a lot of risk in what they continue to push out on the market. Let's take a look at L Brands. LB, after earnings, this one did not do well. It is finally getting back up to that earnings disgrace and pounding. Down on heavy volume on the 5th of May with 17 million shares. Back into it today with 3.7 million shares. Again, even on these gap downs, my particular play, if you want to short these things, is to wait until they potentially fill half of the gap. Sometimes you get it, sometimes you don't. It is tough to sit through that $3 or $4 upside, though. And probably the most interesting thing is to look and see whether or not a lot of people are shorting these stocks coming back up. If they are not, generally you won't get that move into at least halfway filling that gap. But certainly one of the weaker looking stocks out here. My guess is you got a good chance of a test of that $60 low that goes back to May 19th. What else do we have out here? We had L Brands, Donaldson and Company up 8%. DCI. Take a look at this guy. See if we got any volume in any of these. Well, certainly you got a nice pop back into this thing. It is going back into a longer gap, though. Let's go back 2 years in the Wayback Machine, which is also known as a time machine. Charts, and we go way back. This thing gapped down with some volume. That was on the 4th of May, 2015, with 2 million shares. You got about that. It spiked into it today. Again, I'd like to see about half that gap filled, which would take you to about $37. You do have some volume out here. The energy has been occasional on this. See if we get anything for Donaldson. See what they have to say for themselves. Nice earnings. Beat by 4 cents on revenues. FY16 EPS range midpoint, so they're not guiding up or down. See if there's anything else out here. Not a lot. Just right now, a lot of these stocks, people are just too darn short. And if they don't tremendously drop the Baby Ruth and the Punch Bowl, they go lower. Let's see some of the other ones out here. On the loser side, OPTT. I don't know this one, OPTT. It maybe is not one of those, light volume thingy. No big deal. Cons, we've talked about this stock for a while. We shorted it a couple of times in the daily newsletter and made some big money on this thing in the past. It's been very tough to short since it originally failed. This company is kind of a Best Buy combined with an Aaron's Rents, a little bit of both. I have not found any around here, so I haven't and can't go into them. Actually, we were looking for these things maybe to actually bottom out. It looks like things are a little bit tougher in this vein than people thought. But you look at Best Buy, kind of the same thing. Some bad news in that lately. We'll look at that chart when we come back. Give me a call, 877-927-6648. Email me at path@tfnn.com. Put a message in the Tiger's Den.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we have more email out here. Some questions about what Mr. Musk said at the Code conference out there. Didn't really specify what part of it. To me, it's just kind of a big waste of time and energy to have people pontificate about things. It's like all these heroes who say no more war. What does that get you? It doesn't do a whole lot. It's you get some brownie points for doing something that is meaningless. To me, make broad proclamations that we're going to Mars in 2025, big deal. I would have loved to be actually a reporter and asked real questions about all that he put on. I would have asked questions kind of like, okay, you say we're going to Mars in 2025. You have yet to deliver a car on time. Would that have anything to do with this Mars business? Does 2025 actually mean 2040? You haven't actually come in on price. You lose a bunch of money on your cars. I mean, there could have been an opportunity to ask a lot of good questions and not just, do you beat your wife questions? But this is not one of these kind of events where you get any kind of real data out here. And yes, I would have asked him, okay, since only 1 out of 10 people we send to Mars right now would be expected to come back alive because they die of cancer, because we haven't figured out actually how to shield them from the radiation that they would get 9 months there and 9 months back. How do you suspect that we're going in 2025 when we haven't solved that big major issue? Unless I guess he thinks that it's a suicide mission. We're sending people there to die. I don't think that anybody's going to spend money on that either. But again, I would love to have one of these things where people actually ask real questions and questions that are not easy to answer and softballs. And it just makes it very easy to see that clickbait, we're going to the moon or we're going to Mars in 2025. What-dee-do. That doesn't mean anything. It's just, like I said, clickbait for many folks out there. I would have liked to seen. There's so many great opportunities where we could actually learn maybe something that these people are doing in their factories or in their businesses, or understand how they think. But not a lot of that in journalism these days. I think they've all, they must have probably been doing something like gender studies or something instead of paying attention in journalism school. Just my 2 cents anyway. Oracle is off, and not just that. It's down 4%. Nice little gap down on this baby today. I did not see why. I will check the news as we look at the volume, but it's pretty decent energy out here on the downside. CEO is lower. Oracle gets smacked. Whistleblower complaint, opaque cloud booking, says Citi. Oracle faces another damaging lawsuit. I can start to see the theme on this one. Shareholder alert. Dewey, Cheatham, and Howe is on an investigation of Oracle Corporation. Oracle sued by the whistleblower finance executive. I think that tells you everything you need to know on this one. Heavy volume down today, 39 million shares. What could you say? Heavy volume. There was a gap out here that had already been filled last week. That gap goes back to the, March 16th, where this thing actually gapped up on 49 million shares. We got 40 now. So we're probably coming down and into that gap with the same amount of volume. That opens up, as many of these stocks do, a bigger trading range. You've got kind of a ledge at about 34. And of course, you have the previous low, which is the January 20th low at 33.13 that had 25 million shares. That low had never been tested. So continued issues out there. I will get to the bottom of that and read about it tonight. Didn't have a lot of chance to so far today. Let's look at some of these other movers of interest as we get ready to close this segment out. Donaldson, what else do we have out here? Repose Therapeutic. Most of these things out here are biotechs that got some good news. Sienna. Let's take a quick look at that one. Nice gap on this one. This had two big gaps on the way down. I suspect that this one might even get a third gap in the future, so I probably would not touch it. You've got your first major gap down on this on the 10th of January, or no, 10th of December of last year. Your next gap comes on March the 3rd. We've come back and kind of filled this now. You could, and I would not be happy with this one unless you got the third gap. Let's just make sure that there is not a big third gap in this one. But man, these are the kind of stocks that make widows. So you don't want to, you got to see this thing come down and test that May 13th low in my book, or even that March 3rd low again. I don't like too big gaps that I haven't seen the third on, because I'm always waiting for that one to drop like the sword of Damocles across my neck if I get them. But that would be it. Okay, what else do we have out here? Yeah, I think that's about it. Nice move. You got volume. Certainly have nowhere the kind of volume that you had on that March 3rd gap down, $16.32. 30 million shares up with 12 million shares today. In fact, you could make a case that this is where you would reshort this stock for a move back down to that $20 level. But again, I do not short stocks under $30 just because you can get even a false buyout offer that can make you lose a lot of cash very quickly. I just stay away from them as a matter of course, unless I have overwhelming evidence that there's something troublesome going on out here. Let's see if we have anything else on my list of stocks. Oracle, Domera, Eastern Government Properties, Capstone Turbines, a penny stock. Tallgrass Energy, TEGP. Take a quick look at this one. Not familiar with this, but it's down 3%. Yeah, I could say that's why it's on my list out here. I forgot to write it down. It looks like this thing may be breaking its trend line up from the February 11th low. I suspect that we're probably awful close to fully valued in crude, and I think that maybe there's a move that would make it self-evident, i.e., maybe out of the bigger energy companies and some of the other peripheral parts of the energy sector. Okay, and what else do we have out here? Do I have anything? We did L brands. We did some other ones. Well, when we come back, we'll look at a few stocks giving a knock on the high side. We'll take a look at those and close the day out.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And a question from the Den from Medano. And he's looking at the EEM for a potential short in the emerging markets business. Frankly, we got a little bounce today on no volume. You are going up against this heavy gap down day of the 3rd of May. To me, you're probably already, if you get through this tomorrow, it's probably going to be on volume. So yeah, I see what you're looking at. And as always, when the U.S. and the EU and China catch a cold, the emerging markets and the rest of the world catch Ebola and the, Zika fly, mosquito. So I think you're kind of in this. The problem is going to be in the morning, does this thing just gap down and that's it? If the news comes out bad and the market takes it badly, do we just head down and that's it? Continue to see trim tabs data come in that says fund inflows are horrible, and that matches the extremely light volume we have into this fund buying. Can you make a case everybody's waiting till tomorrow until we get the jobs number to figure out whether they're putting money in or not? I don't think so. I think fund managers have already started to lightly put their cash in late in the day. And while we continue to see the markets kind of come a little bit higher, but, we just like yesterday, you get lower. Everybody wants to buy the pullback during the day. No one wants to buy the close, and it's problematic. So I see a lot of sector rotation. Maybe not the end of the market. I'm not predicting Armageddon, although probably would be fun. But I just think that this is about it. We have a lackadaisical market. There isn't a lot of reason to be long. There is probably a case to be made to be short the big markets. But to me, this is a lot more right now about individual stocks. I don't know if you're going to make a great deal of cash trading the indexes where we have maybe 10-point ranges throughout the day, and we end up the day 1 point higher in the S&P cash. So there isn't a lot of swing trading to be made, but I think that there's some decent money to be made if you find the right stocks out there. We've got some that's really moving now in the Tech Insider, so we're happy with that. I'm set up for probably a surprise in the news in the morning. If I don't get it, then we'll probably have to reevaluate what goes on. But I think we could get a little surprise to the downside, mostly just from the total lack of energy and move higher. As we close the show out today, I got less than 2.4 million shares. This is just pitiful. Let me put it that way. It is pitiful, pitiful, pitiful. The volume is wimpy. It is a snore fest. Now, you can make the case that we're waiting for jobs numbers in the morning, but if we don't get volume tomorrow, this is about as bearish as you get coming into summer trading, and you can't push higher with any volume. Eventually, everybody's going to go, well, why do I have cash in the marketplace if there's no upside other than to say I am long? And that becomes problematic. Of course, it is a Thursday. So for the next 2 hours, we've got Tom O'Brien at the 5 o'clock hour. We've got our man, Andy Heck, who I talked to today. It'd be interesting to hear what he has to say. But I was showing him some charts. Actually, I sprung on one today in that commodity sector because I thought it looked good. He thinks it does too. Anyway, we'll see you tomorrow. Remember to sell when you can, not when you have to. And we'll see you same bat channel, same bat time tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.